trading. So if I babble on today, I apologize. I've had about 3 hours sleep. Yeah, rock star, huh? Rock star. That's all right because I'll probably only get 2 hours tomorrow or tonight coming up. So whatever. See, I'm already stumbling. Let me remind you that trading is risky. Let's try the brain. Let's see if I can do the long way. Welcome to Forex.Today. Let me remind you that the purpose of this presentation is education. This is not an alert service. I am not here to make trade recommendations. I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account from TradersWay.com, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Boom! That wasn't my best, but that was pretty good. Barry says, how old do you have to be in the United States? I don't think you're even allowed. I think they're going to ban stoves because people might burn their fingers cooking. So we're just going to eat raw vegetables. So hello, my name is Wayne. How are you? Como te va? Jambo? Ni hao? Ohio? I'm the Chief FX Market Strategist for TradersWay.com, and I love trading Forex. Love it. I was a high-tech, well, I need to go back even further. When I was 20, I ran an organization of 3,000 people, sat on a board of directors in New York City that included senior executives of companies like Arthur Andersen, General Electric. George Soros sat on the board with me. Cool. Then I got my first job at NASA because I was working toward being a pilot and then an astronaut. And then once I joined the military, found out, oh, you're diabetic, you're worthless. So I said, well, I guess I'll be a businessman. So I went off, became a high-tech startup entrepreneur in the Silicon Valley in the early 90s, not the mid or late 90s. Early 90s, before you even heard of the internet. Did that for a few years, then became a venture capitalist because I spent more time helping other people raise money than helping myself raise money. Did that, made 100 investments in various parts of various industries, 100 patents I invested into. And my team of 5 others invested probably about the same much. So I probably oversaw 200 investments into 200 different patents. And then I found this thing called Forex, which played with that for a while, and all of a sudden I found out I was spending more time doing Forex than I was doing my beautiful VC job. I was so happy doing what I was doing. It was awesome. My boss was a jerk, but you know what? All bosses are jerks. That's how you get promoted. So anyways, found this thing called Forex, and then I was on this fence because I liked my job, but this Forex thing just unbelievably fascinating. I was doing very well. And then so the firm promoted me to vice president. I did that for 2 weeks, and I'm like, you know what? I can't do this. I got this new vice president role of a company with 300 employees doing something I love, but I love this Forex thing too. Gotta pick one. I don't do 2 things well. I do one thing awesome. And there we go. Now I'm here, and I had to teach myself how to trade Forex because this is at the very, very, very beginning of retail trading. So I'm here to share everything I've learned since all of that to help you become a success because TradersWay loves you. They want to invest in you and they want you to succeed so that you can trade for years and years and years. And it's a symbiotic relationship, as you should know, because it is a business and they have to pay for employees, pay for risk, and pay for capital. So if you survive and thrive, everybody wins. So that's why I'm here, because we love you. We want you to succeed. So visit TradersWay.com, open an account today, and let us be your prime broker. Give us a chance to earn your loyalty and respect. Do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. Every once in a while, once a month, I'm over at FX Street to host their largest webinar that they have, seen by a couple thousand people by the time a week goes by, but maybe 1,000 people live. Cool. I've been doing that for 11 years and 10 months. So cool. So I'm here. You guys ready to rock? So now I'm 44 or 45 or something like that, and I'm getting 3 hours of sleep. Woo! Nice. See, it gets easy, right? Cool. But isn't that life? All right, so what are you guys trading? I'll tell you, I'm very disappointed, but I can't be. So psychologically, I mean, maybe we'll start there. Psychologically, I'll let you know where I am, right? I'm out of these dollar trades. And you remember when the dollar was weak, I was setting them all up to get strong, the dollar, right? And then I bet on all the horses. I had 5 or 6 trades, all of which were successful. And I'm not complaining because I did well on them, right? What was it, 500 or 600 pips or something, right? Boris and Kathy take 3 or 4 months to make that many pips. So I'm like, I'm okay with that. But here's the thing, and this is the psychological part. You see how we blew through like these pivots here, and these are sells because of the dollars on the denominator. So green means that's the bottom, green means that's the bottom, green means that's the bottom, and I was selling those upper pairs, right? So, you know, getting out in the green zone, especially things like S2s and stuff, it's just simply what you're supposed to do because, I don't know, I'm going to guess, how about 94% of the time, that's pretty close to the bottom. And, you know, they are still there. They're still messing around with these pivots. But, you know, I got out up here, not down here. And I got out just above, actually, R2 on this. So I should be happy. But, like, this M5, if you want to call it that, I mean, it is an M5. I don't typically trade an M5. But my target was just above that. But I ended up getting out way down here. So I did leave pips on the table. I probably could have had at least 50% more pips. But, and here's the psychological part, because I could feel bad about that, right? I'm like, man, if I had only stayed in. Well, that's hindsight, first of all, because it could have collapsed and you would have said, oh, I did such a good job getting out. Good job, Wayne, right? So you can't play that game. You only know what you know. And the discipline part is you have to base it on probability, not hopeability. It's kind of binary. Are you supposed to get out at weekly S2 or not? And if the answer is yes, did you get out at or near weekly S2, yes or no? What it does after that is irrelevant. And I tend to remind myself that. So I'm like, oh man, if I only stayed in a day or two, it trickles in. I mean, the little birdies are sitting on the shoulder going, you know, you moved your stop too quick and all this kind of stuff. And I should have said, you know what? I just did my job. I can't control the market, but I understand the probability, so I played it. It's sort of like playing poker, and every once in a while we talk about poker and that, right? Where if you know the odds, even if you're holding a pretty decent hand, but you look around the table and you're like, ooh, well, based on what I see and based on how I kind of saw people bet with their previous rounds, I think there's a reasonable probability that my pretty good hand is a loser. And what I don't want to do is get caught putting in serious money chasing my jack ace or my pair of jacks or something, right? And all of a sudden I'm all in, but if I only calculate the probability, I only have like a 26% chance of winning, right? So I'm like, well, 26% chance of winning is a lot like a 74% chance of losing. So why would I go all in, right? So I kind of look at it like that, like that was a winning hand to get down in that green zone, you know, and to actually take profit above the R2 is actually, it wasn't a good. I mean, I was late on that one taking profit. I made too much money if you want to think about it that way. So I'm like, I played the hand, I played the round. Pair of jacks can be pretty good, but when there's a king sitting on the table, ooh, right? There's a lot of things that can beat a pair of jacks. And you're like, but it's a pair and some face cards and ooh, right? So anyways, long story short, could have made more money staying in, but I don't think I should beat myself up over it. Okay? You gotta screw this part on correctly, because this is the part that's going to be your trouble one day, right? Remember, one day if you blow up your trading account, it wasn't because you spilled coffee on your laptop and it shorted and all of a sudden you couldn't get out, right? No, it's going to be a software problem, not a hardware problem. So you got to keep yourself strong, keep yourself motivated, keep enjoying what you do. So in this case, you just can't beat yourself up and feel bad about it, because then it starts changing your mindset and stuff. So I should say, you know what? Good job, Wayne. You were disciplined to get out where you probably should have. And then we always have a chance to reload on the monthlies, because the problem is my initial trade plans were based on the monthlies, which means there are bigger moves left. I knew that. But when you hit these targets on like a Tuesday and Wednesday, there's a pretty good chance, a reasonable chance now, that they have a significant pullback back to the weekly central. But that would give up like, what, 80% of my profit, 90, maybe 100% of my profit? So I can't let that happen either. So I have to choose. Do I give back my 50 or 60 pips per trade? For what? Maybe 50 or 60 pips more, but those 50 or 60 pips more are less probable. And losing the 50 pips I already have in the floating per trade, well, that is probable. So which one do you choose, right? Right, the revolver with one bullet or the revolver with 4 bullets? You choose. Like, yeah, I'll go with the one. Right? Yeah, better odds on that one. And just leave it at that. Okay, so hopefully I didn't do too much on that. Beep, beep. What do you think of that? Remember, we drew it way up here, didn't we? We drew this on, what, Monday? It's pretty close, no? What do you think? It's pretty close. Katie says yes. Come on, guys, I'm an only child. I need to be showered in love and admiration just to get me out of bed. Right? I was the kid sitting in the corner playing with toys by myself. Yeah. Me and the maids, you know, but the maids were my friends. You know, I lived such an elaborate life. Yeah. Forex God. No. Emperor maybe, but God, that's crazy. Thank you. Thank you. Thank you, guys. Appreciate it. Jedi, there we go. Ninjago. Cool. Yeah. So why is it that close? It's not that I did it, like, but why can that be done? So that's the part you want to really pay attention to, because it's not me, right? Well, that is the point, though. Katie says that I told you that other people will do it. Well, that is the point, right? So you can get really caught up on the fib thing, but let's get away from the fib. But you can see the fib was important, like, right? Here's the 3A2. Oh, let me change color here. Right, here's the 3A2. That seems to really have been important. Here's the 50%. That seemed to be pretty important. This is the other 3A2. That seems to be important. 50%. Right, play both roles there. Maybe it's a coincidence, maybe not. But if you were selling, okay, we knew that there was a chance here for a sell. Why would that be a chance? Help me out. Why would we, if we were already bearish, why would we assume if price was up here that it may fall? I mean, shoot, it rallied all the way up. Of course it didn't, but let's just say it did. Well, but besides that, I mean, there's lots of resistance, doesn't mean it would hold, but what would a bear be looking for there? What sort of kind of resistance? Well, if up here, it'd be a double top is what I'm looking for, okay? If it was up here, it would be a double top, and if there were bears, they would sell there. Right now, price didn't get there, but we'd have assumption like, oh yeah, if there are bears, they're gonna short any sign of weakness right there. We know that, or we assume that. Okay. The other one would be a lower high, and this is the sweet spot, right? This is what I teach you in here. This is the sweet spot, is why, you know, or where you want to hit the golf ball on the club of your face, or the face of your club. Sorry. Maybe 3 hours isn't enough sleep, huh? So anyways, that one hit. So we do know there's bears, and there's lots of them. Because they didn't wait for the double top, right? So if we're here now in the sweet spot, where can we assume there are other traders? Well, that would be bulls now. Where are the bulls waiting? That's why we have this all priced out, right? Sure enough, but there wasn't enough. And then we have a third assumption now, really it's down here, that either there are more bulls or them bears up there are going to take their profit. Okay. Now, on top of all that, you can do sort of price action, lower low, lower high, lower low. You take this across, you make this an area of interest. You take the old shoulder, make that an area of interest. So this is your no sell zone, which then it did work, right? Made a new lower low, drag this across. This is your new area of interest. Return, right, down, right? Your AO, your area of opportunity. So that's your AO. That's your AO. That's your AO if you're doing price action. Area of opportunity, right? And that's where we are now. You're going to keep doing that. And if we make a lower low from this, then you're going to drag that over, and that's your new AO, but that AO hasn't, right? Gold approaching your AO. Thank you, Overlord. And that's that. And then I think there could be, depending on when or if, but if when, we get something like this. But then we need the dollar to be weak, and that may take several weeks. Now, what I don't know is Does this fall for another week, let's say, and then we have another false rally, then another drop? Right? That I don't know. This is a song for someone. And I just love it, man. We nailed this literally 6 months in advance, to not day by day, but week by week. So at least 30 weeks in advance, we called this decline. But before that, we called the rally. Before that, we called the decline. And before that, we called the rally. I mean, right? Is anyone excited now for next year? Right? I mean, think about it. We literally predicted this. We literally predicted this. We literally predicted this. And we literally predicted this to the week. And we did it months and months and months and months and months in advance. It's going to do this, and then on this Monday, or it'll go down, and on the third week, this will go up, and then from this, it'll retrace down, but it'll be a significant retrace, and that, like, holy smokes, eh? And then what I was cautioning you somewhere in here, I think maybe even this November, December rally, there was a time when I said, look, if you have a crystal ball and you're still not making money, what are you going to do about it? Well, see, Bo, it's not going to happen every year. You're going to have to do your work, right? But that was my analysis, right? That was my analysis. And that's pretty awesome, isn't it? Well, good. Well, I did my work. And then how about this? Let's reverse the psychology. I did in one of the webinars, I did this discussion where I said, imagine the people here that made a ton of money, and then they're buying this. I'm calling it a false rally, and I called it a false rally before it even happened. I said it would be a false rally in the third week of January. And here's the part that you don't even see, and we discussed this, that people tend to load the boat because they think this is about to resume and that the stock market's going to rally forever and all this kind of stuff, right? And that this false rally is the new trend. They load the boat, and this is where they give 30, 40, 50% of their profits from here away. Does anybody recall that? That they did super well here, so they're overly confident here, and this decline wipes this out. Right? And I said that's the real problem where, let's say this was above average month, right? You made 10% here. You didn't see this coming, so you've given 3 or 4 back, and then you loaded the boat here, and then that gives away, right? So you lost 3, and then here's maybe a -7 on this because you loaded the boat again, and you never benefited from this, so you didn't cash that money, you didn't cash out, and then you even added more or rode this down and all this kind of stuff, and you end up washing it out, and you don't have a good year. Where when I coached you, we did well here, but I remember doing really well here, didn't we? Didn't I make like 1,500 pips or something on one or two of the yen trades? And then we called the rally here, so we knew to stop selling the yens. But then we knew here to take our profits and start preparing. We didn't know when. I said it could be a day, it could be a week. Could even be a month. We didn't know when, but I'm pretty sure it's going to come down. So we know to take the profit. It's the psychological point. This isn't going to rally up and up and up. You don't load the boat. You don't pyramid. You take your profit, right? And then you prepare to even make down. So, right? So what was, so I ended up making, what, 5% or something on this move? You remember that? This down and up was a +5. And then down, right? Where did I make 3% earlier in the week? 3% for the month, just last week, right? So you end up getting a 10, and you get a 5, and then we're halfway through this month, and I'm already at 3, and you're like, you see, it's building up. It's not give and take. And I think that's the important part of trading. Right? So like Sipo said, so, does this happen every year? I answer that the way I answer it because it's dangerous where you turn your brain off. And you start thinking, well, what did Wayne say about what am I supposed to do here? Whoa, you're the one with answers, not me. Right? So you got to be very careful the way you say things like that because you're training yourself. So I got to be careful. I got to be particular in the language we use together. So if you're like, does it happen this way every year? No, hell no. No, never. It'll never happen again. Ever. Or maybe it will. I don't know. You tell me. Right? So go back and really analyze some of these moves. What was the technical analysis? What days did these moves occur? Why did they occur on those days? Why did I say the third week of January? Why did I say the Monday after NFP? Right? Why did I say February and March down when everyone else on the planet was saying up? Right? I knew nothing. But it's called a hypothesis, and then you use scientific methodology to confirm or deny your hypotheses. That's all it is. That's why I use technical analysis. My hypothesis is a fundamental play, right? I didn't know more. Let's say I had a better guess. It's only better because I'm right. So it came down to then what kind of analysis do we do? And I'm trying to train you, like, if you're prepared for this to drop and then you see it dropping, what is it that you do? Well, it would be a meaningless drop if you didn't have the hypotheses of a double top. Because someone else had a different idea, right? Load the boat, stock market's going to go up forever. I still think the stock market is going to go up. Maybe not today. Look, it was down 1,000 points again yesterday. So, yeah, doctors and dentists and lawyers, they're the ones that are going to, they're getting knocked out by professionals. So what? This is what happens. Right? You feel bad for the baby water buffalo. Hey, tiger got to eat. It's good for the herd. Moo. Yeah. Don't cry for the baby Elon. But I tell you, that Elon I had in Johannesburg with Ryan, my God, it was like an Elon spicy sausage or something. Man, was that good. Okay, well, okay, pound. So it always starts with the conversation. You know, you ask, will the pound get stronger soon? First of all, why would it? Right? So, Frank, you're answering a great essay question. Why would the pound get stronger in the next 6 months? Go find a reason. It won't be on your chart, by the way. Okay? And then the second part of that equation is it compared to what? See, that's the interesting thing about Forex. It's relative. If they all went up, if all currencies got 5% stronger, nothing would happen. You're like, man, nothing's happening. What do you mean? Every currency in the world just went up 5%. Yeah, but the chart didn't move, right? So you have to say, well, relative to what? So if you want the pound to get strong, let's say, that's your hypothesis, the other thing you could do is start with, what do you think will weaken in that same time period? So now that should even give you timing. So like when I say things like the Japanese yen will get strong until the second week of April, well, then maybe pound yen goes up in the middle of April. Because I'm getting half the equation potentially correct, that would be a weak yen. So even if the pound is neutral, it should go up. But if the pound does get strong, then you really get a double winner, right? So that's cool. But if you want the pound to go up against everything, there's probably going to be a reason for it. So the UK was facing an overly weak pound based on fear of the UK and specifically London, right? So, nobody cares about Manchester. Come on. So, right? Whoa, yeah. So if there was a time, and I was there, what, a year and a half ago? I have a picture somewhere. I'm sitting in Winston Churchill's chair at the museum, and I'm sitting in his chair in the museum smoking a cigar, and there's a big puff of smoke in front of me. Anyways, and people were like, London's going to go away. It's the end of London. London's not going to be a city anymore. It's going to be a ghost town. And what? They're all going to move where? Belgium? Where? France? Yeah. Frankfurt? Oh, yeah. Yeah, Georgia. I don't know. Can you imagine an Englishman living in Frankfurt? I just don't believe it's possible. Right? Quite right. Quite right. Yeah. Yeah. Like, so anyways, maybe they want a stronger pound. It'll reduce the inflation that's created by an overly weak currency, and rising interest rates there should at least dampen inflation because of how their inflation is created, right? So if inflation is a function of supply and demand, let's say, oversupply of money or lack of demand for product, whatever's creating it, a stronger pound should have a positive impact. But think of it this way. It would just go back to where it was before. So if it was overly sold, well, maybe it's just returning to reflect less fear in the market. So maybe that's all it is to you. You say, well, Brexit was overly hyped and overly feared. We're over that emotionally now, so the market is trying to be more logical. but there is, inflation approaching X amount, right? We're going to hit 3% or something. And based on that, based on your research of the Bank of England and the people on the Monetary Policy Committee, as well as Carney, you believe there will be 2 rate hikes in the between now and the end of the year, and that would put the interest rate equal to the Fed funds rate here in the United States today. No, that's not true, right? 2 more. That only puts them at 1%, doesn't it? So maybe it's enough to increase the value of the pound, but not significantly relative to others. So maybe you're just kind of going back to purchasing power parity to before. So I don't know. This is why you need to do your research, right? Yeah, well, rents are down, property prices are down. If you want to buy, you probably need to buy soon. Prices in the Hamptons are down 12%. Oh, yeah. Cool, right? I got to be careful. I have a flight I need to catch. I don't even know. Yeah, I got time. Oh my gosh. Where are you going? Mind your own business, Barry. No, just joking, man. Boom. It's only business, Barry. Don't worry about it. It's all good. All right, so going back to that, ba 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 ba. Not yet, right? Not yet. I think the peso move coming up in a couple of weeks is not going to be a good one relative to our common move, because I think dollar might be too strong. But I don't know. There might be a wave, dollar strong and all of a sudden dollar weak, maybe around what, the next FOMC or something? Not FOMC, NFP. Who knows? But I wouldn't predict that. I wouldn't be as eager right now. Summer, I might be more eager, so we'll have to pay attention. Here's that oil. We finally got to our mark. Isn't that nice? Remember the conversation again, just to burn it into your brain, because this is what makes you good. Our conversation was, if you were a bear, you would sell here. There's a little mini one here. And then there's a potential triple top. Okay? This one being most ideal, this one being most ideal. And when we did it, we were down here. Boom! That's good, right? Right? Here, light the fuse. Nice! So it decided to head up. And then look at this beautiful collapse in our little sweet spot, down, nice little roll reversal, right? And then just finally broke through that target. And here's the big target. So the conversation here after it had fallen off a double top was, it will rally and then fall. And it's a big difference than it will rally and make a higher high, isn't it? What did we talk about yesterday in regards to oil and prediction of direction? What did we talk about yesterday? Before we begin, Anybody? June, okay. Juan's on it. June what? What does it mean? Please continue. Everybody, you can type. Inventories will rise until what? June. Okay, so what could that possibly mean for oil prices based on oil inventories building up until June? Okay. There is time, there is a place. I got to turn this off. Hang on. New chart. Template blank. Okay. We need to beep. Axes. Okay. This is, let's say, quantity of oil, aka oil inventories. Quantity now, Q. And this is going to be price of 1 unit of oil on the vertical axis. Okay? You have two parts of this equation. Let's do it this way. You're going to have demand for oil. Why does it slope down? Because what this means, if prices are high, way up here, then you're going to demand very little oil. And you're going to look for alternatives and substitutes and all that kind of stuff. But if oil prices are really, really, really high, the market's not going to demand that much oil at that price. You understand that? But if prices were down here now, okay, if prices were really, really low, demand for the quantity, right, of oil demanded would be really high because oil's cheap. Everybody understand that? Cool. Hey, Chuck, you ready for Harvard? Does it look good? Huh? Does it look good? Nice. Cool. Then there's the supply issue. And this is just how much oil is in the market relative to what's demanded. So supply is up, right? Okay. So what we're asking here, now I need to draw a new color. If supply goes up, so we said oil inventories will build until June 1st. That means oil inventories will get bigger and bigger and bigger. More and more supply, an increase in supply. It has nothing to do with price. So therefore, the entire supply curve shifts to the right, indicating, now I got to draw this, here you go, label your chart. The original equilibrium price, quantity was Q1, okay? And now we're saying there's an increase in quantity, right? So we go from Q1 to Q2. You understand that? Quantity until June 1st will increase. Here's what I'm trying to get at. Well, at Q1 we had price 1. Price 1, okay, at this equilibrium price of the market of supply and demand. That's basically where we are now, let's say. But over time, demand will probably stay about the same. There won't be a radical shift in the economy. However, I mean, there will be in June. That's why we think the supply curve will shift to the left, an exogenous shift. Summer vacation hasn't happened yet, so we don't need to worry about that. Demand will stay constant, but we believe there'll be an increase in supply. So from quantity 1 to quantity 2, which changes the equilibrium now to this, and this is the new price, price 2. And that means price went down. Oil supply. Got to label it, man. You got to do it right. If you're going to do it right. So I teach my kids. Why even get out of bed if you're going to be mediocre? All right. If you're going to be mediocre, go back to bed so I don't have to see your mediocrity. It's in my space. Right? Anyways, so right now we get it. So now what I'm thinking is, well, if oil inventories are going to grow between now and June 1st, because I studied 50 years of oil supply and from the government reporting, I'm going to guess. I don't know, but my analysis tells me there could be an increase in supply between now and June 1st. Okay. So what happens then June 1st when vacations start in America and Americans start driving around the United States, driving from LA to Chicago and from New York to Florida and all this kind of stuff, right? What happens? Demand curve will shift. Whoa. Right? Demand will go up. So here's the interesting thing. You can get a scenario. Oops. You can get a scenario like this. If we keep increasing supply and demand increases as well, nothing will change. Except what? Prices could go up. Inventories don't have to drop. Okay? They don't have to drop. But we may find out that they do. Let's say inventories also drop. Okay? Then you'll get a third shift in the supply curve. Right? And then you'll get we'll get S3 now. Oops, that was supposed to be, right? Now we have S3. Right, and now, now we're at Q3 with higher demand and a drop. Then you can see, then you get even P4 now. P4 being way up here, right, with this equaling. So, school is great, right, because then you have to explain all these things and move all these. So it's interesting where you could say, well, with an increase of supply, prices will fall. But with an equal shift in demand and continued growth in supply, right? The quantity is indeterminate, but price will go up. You're like indeterminate, and that's where they screw you up too. Imagine a multiple choice question, and they don't even show you a chart, right? They're just like, well, all right, so there's an increase of supply and an increase in demand, what happens to price? And you're like, well, actually, the supply is indeterminate because we don't know if there's more supply or more demand. So it's really indeterminate, but either way, prices are going to go up. You're like, and God forbid you click the wrong one because it could screw up your GPA and you won't make it to the dean's list, right? Every question you have to sweat bullets on. So I often do my homework, and I spend 15 hours doing it, where an average person spends 12 or 2. And then once I'm done, the next day I do it over again. I do each question over again, and I double check the work. I'm crazy. I'm crazy. So anyways, look, I think price will go down. And then when I see people on TV, they're like, you just can't predict the market. It's completely unpredictable. It's completely random. And I'm like, yeah, for you it is. For me, I can draw a freaking chart because I thought about it. I did research. I have true alpha, but I'm sure that person is telling the truth. They really can't predict it. I think it's possible. And you know what is the most important ingredient to all that is common sense. But then you got to know, okay, Americans drive in the summer. You got to know that, and I think a lot of people know that. So that will increase demand. But what you may not have known is that oil refineries know that. They know it. It happens every year. They know it. It's not an unknown. It's known. Happens every year. Humans don't change that much. You got to see grandma before she dies, right? So you got to go see her in the summer. It's just, that's how it works. Great. So if if a refinery knows that, they need to buy, they need to put the oil in inventory so that they can refine it into gasoline. Sweet. So it's common sense. If you know that, well, refineries build up in anticipation because it happens every year. So am I the only idiot in the world that knows supply tends to go up in anticipation of the driving season? And if supply goes up, am I the only idiot that knows that if supply goes up, prices fall? Like, I can't be, right? But what do these guys do that make, $40 million a year, right? Trading other people's money or trading energy complex. What do they do if they don't know this, right? Econ 101. So I'm glad we're here to take advantage of it, and I'm super happy to share it with people that care. Right? I really do. Look at that. So where you get crushed. This is a song for someone like me. Oh. I got 400 windows open. CAD unemployment, worse than expected, 5.7. Isn't this great, guys? Arslan put out the news headline, but he also prepped you with the pivot levels. Gave you a heads up, Canadian dollar unemployment's coming up. Are you guys utilizing our real-time team? Pound yen plunge. It's nice, right? It's all happening in real time. Blip, 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 pop. Yeah. Here's Olympia. A few people are liking. Liking's nice, but give comments and stuff. Just say, hey, thanks, Wayne. Hey, or thanks, Olympia, or just Arslan. Thanks for the heads up. Right? Comment. Thanks for the heads up. Market really popped. Cool. Well, to me, I only sell that pair, and I don't want to sell the pair when the dollar is strong. Okay. So to me, it's like one of those things. Like I don't want to look at it because I might convince myself to sell it. Well, I don't want to sell it if I think the dollar's strong, right? All right. Have you guys posted your trade plans? What can I review today? Looks like nobody, huh? I guess you'll just get better through osmosis, right? It'll just happen. Oh, don't post setups in the activity stream per se. Okay, post them, do a proper post, and it gets put into the activity stream automatically. So let me show you this, Ryan. So like Katie's posts, right? She didn't post them in the activity stream. She made posts. Same thing with William. You know, he was an FX Bootcamp member like 10 years ago. Now he's a full-time paid analyst. Whoa, I gotta go back. Where's mine? 21 hours ago? Guess that makes sense. Yeah, okay. So 23 hours ago, 22 hours ago, I posted my daily video. You see that? But I didn't post it in the activity stream. I made a post, and it puts it in the activity stream. Activity stream. Okay? So you can watch it there. Okay? Or you can do it this way. Click on the link.
Anyways, welcome to Forex.Today, guys. Let's get going. Life is good.
Oh, good. So it actually plays now. There was a time when the software wouldn't play it. Okay. Or if you click on the link, it takes you to the post. So that's the post I made. Look at it's way bigger, isn't it? Isn't that beautiful?
Weight colors. You're doing well. You know, well, you're middle. This roll over, and because it's a higher time frame, there could be a lot of noise, and essentially this ends up being the noise.
Cool, right? So yesterday, this is me going over someone else's posts. So I really encourage you to make posts, and I'll go over your charts with you with the goal and hope of improving your analysis. Look, I'm pretty good at this because I've been doing it a long time. So how do you want to wait 15 years to get pretty good? When you realize you want to be a great foreign exchange trader, you want to be a great foreign exchange trader as soon as possible, right? But didn't they say that when Harry met Sally? I'm pretty sure something like that. So like, how am I supposed to help you if you don't post trade plans? And I realize maybe there's been a disconnect for a while, so it's my fault. I apologize. But I'm not here to prove to you I'm good. Like, who cares? Who cares? Why, right? Makes me feel good if I perform well in front of an audience. But that's not anyone's incentive, right? So our incentive as a community, as a group, or as a one-on-one, one-on-some, is to make you a better trader. That's what we're all here for. So if you post some trade plans, I can work with you and give you feedback to help you improve. Well, let's try it, Ryan. Okay, and I think we can do a test here. So let's say you make a post, and this is your post. This is my post, right? So I just made it. It will go into the activity stream. So I guess you don't even need to do that. It does it automatically. What I was going to suggest is if you put in the link, it should auto-generate it for you. No thumbnail. Supposed to be a thumbnail. That didn't work. Anyways, we'll figure it out. We'll get good at this, guys. All right, so I'll spend more time giving you personal feedback if you make posts. So I need you to promise to make posts so we can help each other. We have a common goal, right? This is something, I'm in a management class in grad school, and we're discussing, what do you call a group of people with no common goal? It's a mob. In my opinion, it's just a mob. So we have to have a common goal and work toward it, right? And if we're working toward a common goal, at least we could then say, well, how are we doing? What's our progress? How quickly are we moving toward that common goal and achieving the mission? Are there ways that we can improve and do this more efficiently and effective? Right? Am I right? I hope I'm right. No, I thought it was Nancy Pelosi holding everything up. They needed $20 billion for drug addicts. All right. So anyways, thank you guys. Katie, I actually have an idea for that. 2 years ago, I have a mini business plan in my head for that, but I don't have time. I'm a grad student. I have lots of entrepreneurial opportunities out there that I think the market needs, but that one I probably would have to put in at least $100,000 in programming to build it. So I don't know if it'd even be worth it, but the Forex games idea, I have a pretty sophisticated one in mind. So anyways. So dollar's weakening here. So yeah, okay, well, before I was going to go, but somebody said, well, let's do exotics. Well, yeah, if you got some weakness today, maybe. Okay, so the Turkish lira is up here. That's a sell zone. Well, I should be careful here. It's not a sell zone, it's a take profit zone. I had it, as you can see, last week going up, but I thought it would stop sort of in here, or R1 is really the answer. I don't think R1 had been developed yet because we were down here. So it's gone higher. This may be enough. Are you a buyer or seller? If you're going to be a seller and you're going to play the pivots, I would sell now. And I would target this. But you have to be a bear, and you have to want to swing it. Okay? But you're selling into an uptrend. Or at the very least, maybe this makes you feel comfortable. Okay? That maybe the market's sideways, and this is really the top of a range. Okay, that's your call. I mean, it's your analysis, not mine. So if that's the case and you're going to sell this, what kind of entry you're going to look for? You're going to treat this like a double top, or you're going to wait for the drop sweet spot idea like I did earlier on those other pairs? It'd probably be more like that. But let's keep it simple. I'm going to play the role reversal here. Okay. So I guess you could do it this way. Insert triangle. And then that lower high should produce a lower low to this level of support. So and then retrace back to here. Now going to the hourly, I would even assume a three-wave correction here, 1, 2, 3. So let's do it. Well, that wouldn't happen like that today. We'd need more time. But let's say like this. If you go, you know what? Almost even a triple top, I think. But anyways, how about like that? Is the more macro wave, not microwave, macro wave. So in that case, what we're looking at is top, retracement, double top, lower low, lower high on the more macro, and the micro you're going to have to go drop 1, 2, 3 extension, three-wave correction, lower high swing trade. Wow! So we went 15-minute, 1 hour, and 4 hour like that. And if you're wrong, because it'll make a higher high and that'll be it. I think if you're above whatever the hell this is, if you're above here, that's the end of that. It's out. Cool. Ryan, the 20 billion is not for cocaine, it's for heroin. Well, you're like, well, that's not enough for heroin then. See, they say there's an opioid epidemic in the United States, and I'm like, no, the United States is sick. The workforce is undereducated, overweight, unhealthy, and they're depressed. So then you move to things that make you happy, which inevitably anything happy will destroy you. If you're Buddhist, you know that, true peace is found in suffering. Or you watch The Matrix and you realize that they made a perfect world and humans naturally rebelled and destroyed it. So you have to create an imperfect world to create happiness. So anyways, everyone's on drugs because they can't get a good job because they're not worth it. So 75% of the United States is the Walking Dead. I'm surrounded by zombies. All you have to do is go where like people hang out. It's weird. They're zombies. They waddle. Americans are like limp. They're sick. I mean, their bodies hurt. It's amazing. Now, I don't know if it's only Americans, right? But it's interesting to watch. Like, wow. So what do you do if you're like 20 and depressed, 17 and depressed? And you're like, I really regret this tattoo. It's not helping me get a decent job. Oh, but my best friend's doing heroin, so maybe I'll do that. But that's what's happening. And it's hitting kids early. Like my son age, right? Like you got to be careful these days. I spend a lot of time focusing on ensuring my children have purpose, that they feel they have purpose. And I hope that's the cure. But 75% of children do not get that message. So, I don't know. Get filthy, stinking rich, see if you can solve it. Over the last 20-something years, I've worked with a nonprofit organization that develops leadership in college-age children, young adults. How do you get them to a university? I'm not focusing on that. But if you can get to university, I'll do my best to make you a future leader. That's been my message for forever. I can't fix the bottom 75%. So anyways, gotta go. Peace on earth. May the pips be with you. May your profits be above average. I'm sorry if this webinar sucked. 3 hours is not enough for one human being, but I'm going to be up late tonight. And 3 hours of sleep 2 nights in a row. Oh my God, I'm going to get some more gray hairs. You know, Ryan says one stupid party and that's it. You know what? You're absolutely right. And I had conversations like with my son specifically on one where, and he must have been about 8 years old, 8, maybe 9. And I said, you know what? So we talked about drugs and it can destroy your life and that's it. Like more quickly than you can imagine. And there are examples that I can give him that hit home. Anyways, and I say, look, here's how it goes down. You go to a party and one of the guys that you want to be your best friend, he's starting to hang out with some other dude at school. And it's kind of bothering you, right? Because you're like, dude, that's my best friend, but he seems to be chumming around with this other guy. Well, all of a sudden they're like, hey man, do you want to do some drugs? Oh, wait, no, I want to go to MIT. Oh man, well, Rodney's doing it. Come on, this is going to be great. All of a sudden you have to choose. You're going to lose the guy you want to be your best friend because he's hanging out with Rodney and he wants to do some heroin, or you choose to go to MIT. Which one do you take? You're going to have to give up your best friend, but if you make the wrong decision, it could cost you your life, and it will be difficult. Have a conversation like that with your 9-year-old. Yeah. Well, I also say things like, look at all these idiots in your yearbook. You won't give a crap about them in 25 years. You won't even know them. You won't even care. So don't worry about it. The only thing friends do is let you down. They're disposable. No, I'm on my way to do something ginormous. Wish I had some sleep. So no, I can't commit to that. No, I will not even be in this city. Yeah. Right. Got to count my paper. Got to stack it high. So anyways, take care, guys. Have a fabulous, wonderful, incredible weekend. If I can get home the Sunday night, but yeah. Anyways. Yeah, might be a friend. Yeah, anyways. I'll see you guys. Have a wonderful weekend. Thank you so much for the loyalty and respect you do show me. So even if I've only slept 3 hours, I got a ginormous day ahead of me. I'm super excited and eager to be here with you. I would have slept in. I'll be honest. I would have slept for the last 2 hours. But I didn't because you're important to me. So thank you for the loyalty and respect. Thank you for being a client to TradersWay. Let them know if you like these webinars. Let them know. And if there are other things I can do to help, let me know. I'm trying to do those things. You post some trade plans, I'll give you feedback. I think that's the easiest and quickest way to get you from good to great. Yeah. Oh, I'll be back tomorrow, Ryan. It's just, fly somewhere, have dinner, fly home kind of thing. All right. Cheers.